Hello, everybody, and welcome to the update today from Investezee. And it's been a while since I've actually made any recording, but since we've been hearing a lot of news, and it looks as if the world is coming to an end. So, anyways, uh, keeping that in mind and keeping in mind the extreme volatility that we have seen in our in our markets, I just thought that it's important that I make some kind of an update. So the first chart that I'm going to talk about here is the Brent crude, and as you can see here on my screen here is actually crude oil itself. So what we have been hearing over the last few days is the rise in crude oil prices, etc. And primarily they are saying that because of the Israel and Iran tensions. But I would like to bring your attention to the crude oil prices since 2022 and at the current moment. So if you see this Brent oil crude here, just notice on the right hand side, I'll just hide all the drawing tools so that, yeah, this will make your life a lot easier. And I will also hide some of the moving averages. Okay, so now you have a clean price chart. So what you're seeing, this is basically the price. You can see that on the y-axis, and on the bottom is the volumes, and obviously this is the time. So this is how the prices are moving along with the time. Now on this chart, if you notice, if I just were to convert this into a line chart and perhaps make this a little easier to read using some other color. Okay. So now if you're looking at the chart and you notice this, you will see that right after the attack on Ukraine that was launched by Russia, we saw the crude oil prices go from 93 all the way to 122. That was in 2022. We saw this go on till July 2022. And since then, the prices have been correcting. They went all the way down till $73, and right now they're at about $90. Now, regarding the increase and spurt in the crude oil prices, I just want to show you that right now the crude oil prices are trending high. There's absolutely no question about it. But there are some huge headwinds and big resistance levels nearby. Obviously, the first one is 95 here, and the next one that we have is 99 or $100 per barrel. Now, another thing I want to point out here is that it's not like the markets did not go here. The markets did go there. If you see from June till almost September, you saw the crude oil prices gaining. And here as well, if you see the crude oil prices have gained from 75 to $90 per barrel. And this level remains a very important level. Unless and until this is taken out substantially, I don't see the oil prices really going up a lot. Now you have to keep in mind that oil prices generally have traded below this level at 86, 89. So there's a very good chance that we might see a correction. But again, you cannot. There is absolutely no way to know exactly how much this conflict is going to escalate, or if it's going to escalate at all. So in my view, the the current levels that we are watching out for in crude oil is actually at 95 and 99 dollars per barrel. The fact that crude oil in short term is in an uptrend obviously is not very good for us, especially the Indian markets. So that is something you have to keep in mind. Now, also you have to understand that the Indian market themselves are extremely overheated. So what do I mean by that? So I will go to the next chart and help you understand that. So this is the chart of the mid cap index, and let me just convert this to full screen. Yeah. So now, as you can see here, this on the on the this is on the weekly time frame, and the oscillator I want to talk about is this oscillator here. You can see here that whenever this oscillator moves at very high readings of 60 above, you tend to get a major consolidation in the market, except for this time where it actually consolidated much earlier. Okay, but around this level at 60, 65, 70, generally you start seeing some consolidation, which starts to kick in. Now what is happening out here in the market currently is that we are pretty much at that level. We are already hitting that level, on the mid cap index. So what this is telling you is that the markets are definitely technically extremely overbought. And when you have a market which is already extremely overbought with crude oil prices trending higher, it is definitely going to put pressure, because the market is now, the way it works is that market is now almost looking for a reason to correct. All right. And also, it's, you can think of this, if you are, if you are probably riding at 20, 30, 40 kilometers per hour, or driving at that speed, you can deal with uncertainties better. But when you are driving at 120 kilometers per hour, you really do not want, you do not want any surprises. So what's happened right now is that the market has gone up so fast, so much, and it's at very high levels, that any sort of negative news will have a big impact on the market. and a lot of people are sitting on profits in their portfolio. So the question that they are asking themselves is, do I need to actually assume more risk given the fact that there is so much uncertainty? And what that leads to is some amount of profit booking. So the market is basically just doing that. It's doing certain, there are players who are probably moving out of mid cap, moving to safer stocks, maybe even moving to gold and silver. And I think that is exactly what we're noticing. So what we are seeing here is a very sharp spike in crude oil prices, coupled with mid cap and small cap. And let me just move to the small cap here. You will see the small cap index exactly the same thing. Extremely high momentum readings, extremely overbought readings, and these are on weekly time frames. This is not something which is on short term time frames. So weekly time frames tend to be a lot more reliable. You can see here when the when this acceleration indicator tends to go below, the market tends to make a bit of a top, and that's exactly what has happened here. So in my view, this is not exactly, I mean, you cannot predict if this is the top, with 100% conviction. All you can say is, what is my risk, if I were to take a fresh entry here, or if I am invested right now. I would say in terms of small cap index and mid cap index, the broader market will definitely be under pressure. So we'll have to look at specific stocks which are showing very good relative strength, and probably narrow down to those individual stocks. Also, I think what will happen is, given the fact that the market is going to be very choppy and volatile, you might have to, you know, you know, you might have to just sort of cycle through your stocks fast. In other words, your holding time might reduce. You might have to book your stocks within 10-15%, because what is going to happen now is you might not get a secular rally in a stock, except for maybe a few couple here and there. So you have to be watch out for those kind of opportunities. And I think that's where the market is going to be for the next few months. I don't see this change immediately. I don't think we are going to get a sharp rally like what we got earlier. And if you see here the breakout that happened, all the way from, if you see here, the fresh all-time high from 12,000 to 16,000, this is a very sharp rally in a space of very few months. And this is a small cap index. Obviously there are some small cap stocks which have gone up a lot. I'm sure there are some of you who are holding stocks. I know that there are stocks that you're holding which have 100% returns, etc., 200% returns as well. So the question you have to ask yourself is, do you think you will find more stocks doing that, in the next few months? And I think, in my view, the answer to that is no. Most of the times you're going to find stocks which go up 10, 15, 20%, then sort of halt or go into consolidation, or maybe even correct. So I think that's the market we are in. It's not a very good market to be in from an investor perspective. But this is just how the market goes through periods of expansion and contraction. So we have had a very sharp period of expansion over the last year or so, and now we are probably entering into a phase of consolidation. I wouldn't exactly call this a bear market yet, because as long as the prices trend up, you cannot call it a bear market. But there is a possibility of a very long consolidation. I would actually be very happy with the consolidation. I'll take it any day, because even in a consolidation, you will find a lot of stocks which do well. The problem really is if there is a sharp correction, and I think that will come probably because of a spike in crude oil, or a surprise on the election front, on the domestic front. If the current ruling party were to not win, that will definitely cause mayhem. There's absolutely no question about it. So yeah, I mean, this is exactly, these are the things that you need to look at. And given the position of our markets, and the global situation, also the domestic situation, the risk remains elevated. And what that means is that you will not find a lot of fresh money coming into the market, and that will keep putting pressure on the equities overall. So this is something I expect to continue. I don't expect that this is going to stop immediately. Now let's look at some of the instruments that are actually doing well, and let's look at gold and silver. So this is gold in the global markets, and let's go on the monthly time frame, because this just gives you a much better perspective. Now this is gold on the monthly time frame. I don't think there is any doubt that over a long period of time gold keeps going higher. And obviously that's because from time to time the Federal Reserve keeps engaging in monetary easing, or fiscal ease, you can say, where they basically keep making the printed money cheaper. And I think that is exactly what is causing gold to go high, go at these levels. And if you notice, this is something that whenever you get a breakout after a long consolidation in any instrument, it tends to be a watershed moment, and you can see a multi-year bull market. So if you go back here, we have data from 1972. So 1972, you had a breakout. This is actually when they were trying to remove the the currency backed by gold. So they were basically doing away with that, which obviously led to gold going very high. And then if you see from 1981 all the way till 2006, it's amazing. Even though in India the prices are going higher because of our our you know depreciation in the currency compared to the dollar. But if you see globally, the dollar prices of gold, they actually weren't going anywhere for 20-25 years. And then after this breakout in 2007, you can see there was a very sharp rally. Now let's see here, from 2011 to now there really wasn't any gain in the prices. If you see, this is a nice long consolidation, and if you zoom in, you will see a very good breakout on high volumes. All of this, if typically on monthly time frames, when you get this kind of a consolidation and breakout, that breakout is not going to get over in like a few months time, or a few weeks time, or after a 10% rally. As you can see, historically it tends to be a multi-bagger. It tends to run for maybe a couple of years, 3 years. Are we going to be in such a bull market in gold? Well, nobody can say for sure, but looking at historical data, I think that's a very high possibility. So that's where I would like to bet. I would probably say that there's a good chance that gold continues to go higher from here. And given, so there are two things here. Number one, obviously the Fed is going to cut rates, but also the second point here is the geopolitical tensions. Anytime people talk about war or something, people are looking at asset which is safe. And what is a safe asset? There's nothing better than gold, right? I mean, no matter what happens, whichever country goes to war, whatever happens to any country, gold will retain its value, right? And for example, if you're holding, let's say you're holding even US dollar, and suppose US gets involved in a war, that's not going to be great for US, right? So irrespective of how big a country is, the currency will suffer. But that's not the case with gold. Gold is gold. You can go around wherever you go. The value of gold is not backed by any individual, you know, government. It is just the inherent value that we've had in gold forever, basically, right? So people will always use it as a store of value no matter what happens. And that, coupled with the fact that there's already rate cuts that people are talking about, and in case of a geopolitical stress, a rate cut becomes even more imperative because they will want to fire up the economy. So looking at both of those things, I think there's a very good chance that this continues to go higher. And we have also had what we can say excellent breakout on the charts. So you couple both the things together, I think the future looks good for gold. And on the daily time frame, if I were to just look at this, obviously short term it looks extremely stretched. So you might get some correction in gold, and I think that might be a good place to buy. I'm not saying that it's going to just never come down. That's not how any asset moves. If you can see here, there always tends to be series of higher highs and higher lows, right? So you will keep getting this consolidation, and then suddenly these sharp upspurts. So in my view, if you are looking at investing in gold or something, it's not a bad idea. I would still prefer stocks. Maybe few months down the line. But right now, if you are getting on dips and you want to have some allocation to gold, I don't think this is the worst time in the in the history to be long gold on dips. I think it's a pretty good. It's doing pretty well, and I think the rally is going to last for a couple of years. That's what has happened historically, and given the situation we are in, I think that's likely to continue. And now let's look at silver. So if you look at silver, gold and silver obviously tend to move together, and no surprises here that we are seeing even silver go higher. Now, silver is a very interesting commodity. While gold is at all-time highs, silver isn't really there yet. So if you see, silver is still at $30. Its all-time highs is somewhere near $50. Now, if you are looking at going long silver right now, I think, in my view, there's a very good chance that silver will outperform gold in the next couple of years. It's just the way silver is positioned. Because if you go back and look at the highs of silver, it's nowhere close to where it was in 2011. And given the fact that we have a very sharp breakout now, again on the monthly time frame, if this level gets taken out here at 30, there is absolutely nothing stopping silver on the monthly time frame from going till 50, and this level then will actually become a big support level. And now, it's not, the thing with silver is that it has two qualities. It is also an industrial metal, and also it is a precious, semi-precious metal. All right, so if you go and look at some of the other metals, I will show you some of the other industrial metals like copper. So this is copper, and look at what is happening to copper. You see the commodities rally. It's here in copper as well. So the industrial metals are doing really well. You can see here this candle here. Again, we are very close to the all-time highs. Now let's go back and move to zinc. Yeah. So as you can see here, zinc. Let me actually show you on the Indian markets, perhaps more data. So as you can see here, zinc, while it has been struggling, there is actually very, yeah. So I don't have a longer term data for zinc, but as if you can see here, zinc has also, you can see this is a big resistance level here at 2672. It has broken above that. Now all the commodities, if you see, are actually in a bull market in a way. So whether you look at silver, you look at gold, you look at copper, you look at zinc, even I would say lead to a certain extent. Even lead is actually showing a lot of momentum. So all the commodities, all the industrial commodities are showing a lot of momentum. Why is that happening? Again, like I mentioned, rate cuts are a big factor. Also, the fact anytime you're talking about rate cuts, there is a very good chance that those rate cuts will lead to more investments, and that obviously means very good for the commodities. And also, I think right now China has a large amount of dollars, so it is trying to back those dollars by gold to avoid the devaluation of that. And so it is really buying gold. And also, Chinese activity is picking up, Chinese manufacturing activity is starting to pick up. And so much so that the US Treasury Secretary, if I'm correct, Janet Yellen, she has mentioned that there is overcapacity in China in certain sectors, and there's a chance that they will be pushing those products in the US markets, and they're actually making policies for that. So you can that gives you a sense of how overbought or how much how the I wouldn't say overbought, that's the wrong word to use, how much overcapacity there is in some of these Chinese factories, and how the manufacturing is picking up for her to say something like that. So in my view, as the Chinese activity picks up, manufacturing activity picks up, there is rate cuts happening, and as more and more sanctions are applied on Russian metals, I think there's a good chance that you will see this going higher. So given the backdrop, I think these are, when you look at monthly time frame, this is a very long time frame, and much more reliable than obviously smaller, shorter daily time frames. These trends, they tend to really persist. And so I would say that we are looking at more expensive commodities, and that is obviously going to benefit silver, and higher prices in gold, because of, like I mentioned, I think the geopolitical risk and the Fed cutting the rates. And when you look at the charts, they seem to confirm that. And the equity markets, I think you will have to look at specific stocks. Again, commodity stocks will do well. So for example, let me just show you this company called Hindustan Zinc in India, just, and you will just see the breakout here. So you can play commodity specific stocks in India. So you can see Hindustan Zinc again on monthly time frame, fantastic breakout. Another stock I will show you here is Hindustan Copper, and you will see again excellent breakout on monthly time frames. So this is a story that you can play in even in stocks. So if you want to invest in stocks, or you want to directly you want to avoid commodities, which I would say, uh, for a retail investor, unless and until you have a very large corpus, I would not recommend commodity trading. Or there are no real ETFs in India to you make use of in terms of copper or zinc. So if you want to play that theme, you can play that through equities itself, and in your equity portfolio itself, you can buy these kind of stocks. So I think this is where we are positioned. I'm giving you a broad idea. Again, if there is some changes, if I feel things are changing, I will obviously update you. And lastly, I would like to point out the US dollar index. Now, this is the strangest thing about whatever we have discussed till now. If you see here, the dollar index isn't exactly falling, right? Now, this is what I mean, that by the fact that sometimes, even though people would anticipate that whenever you're having commodities do well, you want dollar index to fall, that's not always true. As long as dollar index remains in a range and it doesn't go up very fast, it should be okay. The problems, the equity markets have a problem when dollar moves up very fast, and that is something you have to watch out for. If the dollar moves up very sharply, then all commodities, because they are pegged to dollar, right? It's gold in $2,000, per troy ounce, etc. So if you're having that kind of if you're having your you're having a commodity which is obviously measured in a particular currency, and that currency itself is strengthening, then you will see commodities being under pressure. Also remember one thing: anytime we talk about dollar, it basically means cash. So if the value of dollar is going up, what that is telling you is that more and more people are parking money in cash. That means that they're not investing it somewhere else. which means that they don't expect the economy to do too well. So in all, if you look at dollar in that sense, anytime you're getting a very high value in dollar index, or if you're seeing dollar index go up a lot, it means there is risk aversion in the market. That is how you interpret that movement in the dollar. And right now, if you see, that is exactly what we got in these months between April 2021 and October 2022. If you notice, that is exactly what we saw. And if you notice, the moment this thing started bottoming out, the moment this thing started falling, the 2023, we had an excellent rally. Now again, here, if you notice, we are seeing a rally in dollar index, and that will put a lot of pressure on on the equity markets. As long as it goes up and comes down or remains sideways, just doesn't take a very strong trend in one direction, it's fine. But the moment it starts to move very strongly in a particular direction, then there's going to be trouble. So you have to watch out for that. If the dollar index does that, again, like I mentioned, that happens typically when people perceive the risk to be very high. Now again, the question, like a lot of you would ask, is, then why isn't gold going down? Like I mentioned, so what is happening is the people who are buying gold and putting the money in cash. So this to me tells me that people are staying away from a lot of what I would say, from a lot of riskier assets like equities. Equities are one of the riskier assets. So that is how the market is positioned right now. Looks like there is some flight towards safety of gold, of metals, industrial metals, where they're anticipating higher production in China. Probably the prices are also linked to the fact that they're looking at the next year or so. And I think the dollar index, I think, is just right now, it's because of this, the geopolitical news that we are getting. So as usual, the markets are in flux. I think the long term trend in the commodities have a very high probability of persisting. And if that is going to happen, I would not want to see dollar go up too much. I would want dollar, sorry, to stay below 107, 108. It shouldn't go above this level of 107, 108. If it does that, sustains above that, then I think you'll start seeing pressure across the board, because what that is telling you is that people are moving to cash more and more, except for maybe gold, which you might still see rally and you might see a premium there because of the fact that it's a, it's a, like I mentioned, it's a store of value, a safer store of value. So let's see how this goes. This is definitely going to be a year which is very volatile. And I think it's good, uh, to just not be too leveraged. And even in your equity portfolio or whatever investment portfolio you have, I think good to have some amount of cash aside, and you can put that cash in FD maybe, or even a liquid fund, and keep deploying it. As the volatility increases and the market's correct, you keep buying the stocks. So spread over the next 3, 4, 5 months, if your purchase, instead of buying at one go. With that, I will end this. It's been a long video. I hope it was informative. And if you have any comments or any questions, you can message me personally. Thank you so much. I will end it now. Thank you.